nhưng mà chị
biết được.
Okay, so good morning, everyone. I hope that you are good. Sorry, good evening, everyone. I'm sorry. Uh, um, I hope you're okay. So, is there somebody in the chat who could confirm that you can see me and hear me? Should be okay. Good evening, Kian. Okay, so it's okay then. So yeah, I posted a message for some of you guys who didn't change their name. I've got Mr. or Mrs. iPhone, and Mr. or Mrs. Gao Peo. So please, thank you. And so please change your name with the group number for financial control, because we will we will move into groups later. Okay, it's not now, but later. So our job for today is firstly to finish the case about the web case about the variances. We are nearly finished. We made the most important part. Then we will conclude and move to the balance scorecard presentation. Theoretical presentation. So knowing that balance scorecard is about what you do for the group work, right? So we see, hopefully, if we're lucky, we finished by the break for that. So we can move in breakout rooms then just after, and have a few 5 minutes for me with each group before we leave. And then just before 10, we will come back to the main room and say bye-bye, because this is the last course. So I will be able to answer any question if you have any at that time. Okay. So let me firstly share the information. So this information is from the web case. Okay, it's also an information you have in this is what we looked at, but you have it in the case as well, right? So we said that we wanted to finish to calculate the variances for the so did we I don't remember if we finished to calculate. Yes, I think we finished to calculate for the direct labor, right? But we did not comment on this, right? So maybe I told you just to try to find some explanations for this. So I think we did that. So okay, so what we had in the case is that we have a level 3 analysis, right? And for the level 3 analysis, we calculate price and quantity variances, price and quantity or efficiency variances for the direct material and direct labor. Okay, so these ones are the most important ones to analyze. And so I told you that the first thing when you do some calculations like this is already to identify in your case what is QS, QA, PS, PA, even before you get into the calculation. Okay, so what is the standard quantity? What is the actual quantity? What is the standard price and the actual price? Okay, so this is in the context of labor hours. This is a number of hours that people worked. Okay, so that's the standard number of hours. So we plan to have 800 hours, and the actual number of hours has been more. Okay, so we should have, of course, an unfavorable variance for the quantity variance, and for the price we also have something which is negative, because we have a standard labor cost per hour, okay, and actual labor cost per hour. So the standard is 20, and the sorry, and the actual is 22. Okay, so we calculated thanks to this the variances. So for the price variance we have minus 18, right? And for the efficiency variance was 20. 38 is the total of the two. Okay, so so we did some explanation for the direct material yesterday. And I told you that it's always good to have internal reasons and external reasons. So we can do that already for the direct labor. Okay, we can, so we could say which department. Okay, we are which department for the price variance, which department for the quantity variance. Okay, and finding internal and external reasons. Okay, so this is what we can use, internal and external. Okay, so price is unfavorable this time. Same thing for the quantity variance. Okay, so for the direct labor. So when we say about the price variance, we're saying that the cost has been higher than expected, the cost per hour. What can be the reason, the reason why the cost per hour has been higher than expected? Can you name in the chat? What could be the reasons why the cost per hour of labor has been higher than expected? Higher quality labor. Yes. More skilled people. Okay. So more skilled people, and so it means that it's more expensive, right? Maybe I don't know, maybe we hired people, or for some reason we want to keep some people, so people have been here for a long time, and so it's more expensive. Market demand, make labor cost increase. Okay, so external for the market demand. Okay, market demand make the labor cost increase. Okay. Okay, so this one is external. When I say high quality labor, more skilled, more expensive, I think it's internal, because this is us, right? Who decide to pay the guy more because we want to keep them because they are skilled. Productivity of worker decreased. Okay, so that would be in the quantity variance, right? Productivity of, that would be something, I think, internal for the worker. Which department we still have to say, and so external we still have to sorry, made a mistake. Okay, Ctrl C, Ctrl V. So productive, more workers to do the job. Okay. Yeah, or more hours. Okay, which goes with productivity, which is the same thing that to say that the productivity of the of the worker decreased in the festive season. Bonus wage. Okay, so that's a good one. Thank you, Tran. So we are okay. Let me just copy paste your comment. And let me name you, if I may. So I didn't do that before, so I hope the other people will not be frustrated about this. I just thought about that time. Yeah, that's a good one. And we can generalize it, right? We can say that we need to pay bonuses sometime to people because of some reasons, okay? It could be more extra hours needed, higher rate, okay? Sometimes that can happen, okay? Because we are not very organized, okay? And so we had more extra hours than expected, so that needed to be paid at a higher rate, which is the same kind of reason than the festive season bonus wage for labor. Okay. So do you see average salary is higher quality labor. Okay, trying again. Okay. Um, more workers to do the job. That's hung. I should have thought about this before. That's more interactive. We learn, right? Doing things online, we learn every day. It will never replace to be in the same room, right? And work together. So, Mr. Liam, so hire more temporary workers outside during peak seasons. Yeah. So that would be more a price, right? Price and favorable. Sorry. So we have to be careful about this one because sometimes in an accounting point of view, temporary workers is still okay. But yeah, no, it's still okay. But sometimes when we I don't know how to say that in English, but you have these companies. In French, we say interim, like Vedior Bis or Manpower or stuff like that. Those companies who you call them when you need to find some 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 workers. So, but this time it's more like an outsourcing thing, so it's more an expense than it's not a salary. Okay, so um, okay, quantity variance. So we needed more workers to do the job or more hours to do the job. Okay. Um, I don't see for external here. We have for the price we have. Okay, so for the price variance, I think the department, which is the one we should relate to, is human resources, right? Human resources department. Okay, because these are the ones who are gonna decide maybe for to the rate per hour or stuff like that. And so okay, so external for the price also new laws about minimum wage. I like this one, minimum wage or more charges on salaries. Okay, so that's a good external one as well. The average salary is higher. Yeah. So increase in the average salary can happen. Can happen. The company can decide, like in my company, for example, I think every year there's plus 1% every month of June, plus 1%. But it can also be linked to laws and regulations. Okay, so it can be at the company level or it can be at the government level, at the country level. But both are understandable. So for the price, we have bad plan of workers numbers. Yes, that's a good one. Quantity, bad plans of workers numbers. Okay, so, and maybe that could be also an explanation for the, for the higher number of extra hours. If we plan bad, right, it can also lead to a price problem. So external cost for unfavorable quantity is new laws or max. Oh no, it's not quantity. You're right. It's price, right? No, it's price. It's price, about the price. New laws about minimum wage. So external cost for unfavorable, new law for maximum working hours per day. Okay. Yeah. That's good. Very good. Thank you. So we have one. That's very good. Thank you, John. That's true. And all equipment make manager to hire extra labor. Yeah, so all the equipment would be internal unfavorable quantity. So let's say that I would put it more hours to do the job. Okay, because we for this one we have like if the machines are old, they can work not very well. So sometimes you maybe you the machines are not efficient, so people are waiting for the machines to be repaired, or it takes more time because they are less effective, or it takes more time because the setting up takes longer, and so on and so on. So for the quantity variance, I would say that the production department is the one which is responsible, right? More about the about something which is okay, I'm gonna put it internal. Less qualitative, no, okay, yes, less same idea, less qualitative raw materials make people be less productive. Okay, I don't know if you get it. If you have a raw material that changes from one period to the other, maybe the people will not know how to use it, so it's going to take some time. Okay, so it's going to take some more hours to do the job, or you will have, because there is more wastage, then people will have to do the job again and again to finish the number of units they need to do. And why I say that, because um, because so it shows the interaction between the direct material and direct labor. So in the direct material, we say, okay, maybe they changed the raw material they bought, right? Because we had a positive favorable variance for the price. Okay, so let's assume that they buy a raw material which is lower quality. Okay, so they save price. So that's why we have a quantity variance for the direct material, which is higher, because we need to use more material to do the job because we have more wastage. But maybe also it can also influence the number of hours people are working on. Okay, so what I mean is that sometimes from one cost to the other, we can have some interactions. And so external explanation, less demand for the company product. Yes. Okay, that could work for the quantity, because we still have the same quantity of hours available, but we have less demand, so people are not working. No internal, okay, no internal process work instruction. Yeah, okay. So, and no internal process work instruction. That's quantity internal, right? And this one is okay. Sorry. So just okay. I don't know why this one is doing that. Okay, bon, pas grave. Let's not lose time with this. Okay. Okay, high demand during holiday season, and we will finish with this one. So that would be a price one, right? I think I would say it's external. It goes a little bit with what was said before about market demand make the labor cost increase, same thing, right? So if we have some problem to find some people, that's it. Okay, so I guess you get it. It's fun, right? To try to find explanations. So, so to summarize, we can say that um, we can say that um, okay, so we have price variance, quantity variance, right? So quantity is here. And for each, we can say, okay, which department, so more human resources for the price, more production department for the quantity. So the fact that we calculate subvariances that help us maybe to identify who did a bad or a good performance, okay? Do not forget always to say that maybe this is, if your performance is not good, it's maybe because you did a bad budget, and you can put it everywhere. Okay, so never forget to say that as well. So it can lead you to the fact that we have bad predictions. And so, okay, so price, quantity, which department, internal reasons, external reasons. Why do we separate this? Because the internal reasons, we can do something about it. So we can we can implement actions to solve the problem. And external, we cannot. Okay, so if there is a change in the regulation, we just have to adapt, right? If it's a question of, I don't know, too much turnover in your company, meaning that, you know, you have a bad management in the production department, so people are not nice with the workers, so workers are leaving, or because they are not paid enough, so they are leaving, and so you have a turnover, and so new people arrive each time, and of course they have to learn how to use the machines and so on. So we are in the manufacturing process here, so this is how we talk about machines. Could be the same thing for any industry, right? If you work in auditing, in an auditing firm, it's a service firm. It's really about you and the number of hours you bill to the client and the price you bill to the client, which depends on your level of skills, and usually it's your level of experience, and maybe also the level of diploma that you're going to soon improve, hopefully. And I wish you the best for that with the MEBF, right? So we can adapt that to any kind of industry, of course, any kind of company. Okay, so yeah, that was fun to do. Thank you for all your contribution. I hope, sorry if I forgot to put one name of one person somewhere. It's not on purpose, of course. It's just that we are trying to move on. So I thank all the people who contributed to this one, and all people who contributed since the beginning of the seminar as well. And so I think we're done with this one. Okay, so I think we can come back to the slide and quickly do the remaining ones. So this one is important for me. Okay, so this one we just did. Let me just, sorry, change the configuration of my two screens. Okay, and so I can see better the PDF documents. Okay, so here you have, you don't have this one, but I will provide you with this just after the end of the seminar. Okay, so we have a summary of the level 3 analysis. Okay, so we have direct material here and direct labor here. Okay, so we got the price variance, favorable and unfavorable quantity, and here both unfavorable. Okay, and do not forget always to check that it goes well. It's the same amount that what you have in the level 2. Okay, because again, what we just did here, we just take this amount and we split that into a price and a quantity variance, maybe to better understand why we have such a variance. Okay, so we can take actions. So as we can see, when it comes to variable cost, such as direct material, direct labor, we can calculate price and quantity variance, and we can really understand them. We can also do that with the variable manufacturing overheads, but it's less interesting. So what I'm going to do is that I'm going to do it very quickly to show you, but it's less important for me. Okay, and for the fixed overheads, well, we can just calculate and, you know, try to find, you know, there's no much we can do about it. So we cannot take a lot of actions for it. Okay, so let's talk about the variable overheads first. So for the variable overheads, it's the same thing. It's a quantity and price variance. Okay, so the name is different. The name is a little bit complicated. We talk about the variable overhead cost per unit of cost allocation base versus the budgeted one, okay, times the actual quantity. So that's a price variance, okay, because it's a actual price minus budgeted price times the quantity, okay. And afterwards, we have the efficiency variance, which is a quantity variance, okay, that we find. Okay, so you have the data here from the case, okay. So I'm just gonna do it with you, and we're not gonna spend too much time because it's less important. Okay, so Web estimate a rate of $30 per standard machine hour for allocating the variable overhead cost. Okay, so we estimate a $30. Okay, so this is what we affected to the calculation, and so we have additional information. Okay, so finally we can see that the variable overhead cost per machine hour has been 29 instead of 30. Okay, because of when we take the actual result. Okay. So finally, we should have allocated 29 instead of $30 for variable cost per hour, okay? And so it should be favorable for the price, right? And for the quantity, where the quantity is how many hours we had available to allocate the variable cost. So we plan to have 4,000 hours, okay? And we finally spent 4,500, okay? So we should have an unfavorable variance here, okay? So let me just go back to the Excel file to do it with you very quickly. And that's it. So, okay, so firstly, what I do is that I take what is the actual in level 2. So actual is the amount I really paid for the variable manufacturing overhead. So this is this amount we are talking about, okay? And the flexible budget is here, sorry, here, so 120, okay. So we have a difference, okay, which is unfavorable. And so QS, well, we just talked about it. We got 4,000 hours that was planned, and we finally used 4,500. And for the standard price was 30, and we finally did 29. Okay. So if we go for the QAPA for the actual cost, we got the same thing than here. Okay. So maybe I can put a negative sign. So the actual cost has been 29 hours per labor per machine hour, okay, times 4,500, okay. The intermediary is so actual input quantity times the standard price, and so in between we calculate the spending variance, which is nothing else than price variance, okay, here, so that's a price variance. And so it's favorable, okay, because we have less cost in reality than what we have, because we allocated 29 instead of 30 that we plan to allocate, okay. Here it's more allocation, so that's why it's not so easy to, it's more like, did we allocate well according to the budget, the variable manufacturing overhead. So it's, just did we over allocate or under allocate the cost compared to what was budgeted. Okay, it's just to be critical with what we do. Maybe we can say that the main takeaway of this is that, okay, maybe next time we have to think about maybe using 29 instead of 30 if it's the real one. For the flexible budget, well, it's QS time PS, right? Sorry, again with a negative sign. And for the efficiency variance, we do the difference. Okay, so this time is unfavorable, and the total variance is the sum of the two. Okay, And so we check with level 2 analysis that I put it here. So yeah, it's okay. So this is how you can do this. I'm gonna reduce a little bit so you can see. No, it's not a good idea. Sorry. Okay, so you got QSQA, PSPA. And for the calculation, same thing. So what I mean is that, again, it's less important for me, but please take away that it's the same type of calculation that for direct material and direct labor, because we are talking also about a variable cost, okay? So, so it's a quantity variance and a price variance, but the quantity and the price are here a little bit different. The price is the standard cost that I should allocate to the product for 1 hour, for 1 labor hour, okay? So each time there is 1 labor hour or machine hour, I don't remember. I think it's machine hour. Let me check. Machine hour, sorry. Okay, so we decide that each time we can measure 1 machine hour, we should allocate $30 of variable cost for the electricity, for something like this, for every other variable cost which are not labor or material. Okay, so electricity, whatever, water, whatever, okay? We should take an amount of $30 each time we have 1 machine hour which is worked, okay? And we plan to have 4,000 hours. And so we plan to allocate 120,000, right? And in reality, we allocated 130,000 because finally, the variable cost for all those things, electricity, water, whatever, has been $29 for 1 machine hour, okay? So it's been 130 on the whole, and we had more machine hours to allocate it, okay? So we have globally, we underestimated the variable cost for manufacturing other than direct material and direct labor that we should have imputed. And so this is what shows in the result. We have a negative amount for 10,000. So firstly, it's because we've been maybe not so precise for calculating what should be this variable cost per hour. And then, yeah, there's been a mistake in the number of machine hours. Okay, so explanations are not so important here. Maybe it's more for me as I understand it. It's more something we can use in the budget service of the company to make it better for next month. Okay. So that's it for this one. I don't know if you have any question. No? Okay, so let's just finish with the fixed overhead. So for the fixed overhead, I think, yes, it's here already, right? So it means that since I worked from the template, you should have it already calculated. And I remember I did that on purpose so we don't lose time, because there's nothing we can say here. Actual fixed cost has been 285. It was planned to be 276. Okay, so it's just what we call. So there is a mistake here, I guess. Yeah. Okay, that's better. So spending variance is 9,000. Okay, and this one is of course also. Voilà. So the spending variance is 9,000. Okay. Difference between actual cost and flexible budget. So what does it mean here? Well, same thing. It's not so easy to, I mean, I always have this mentality to say when I calculate variances, it's how can I use that to make progresses for the company? Here, there's not so much actions we can implement, right? So we plan to have 2,676 and we have 285 of fixed cost for the period. Okay, so we have more than what we expected. So we just have to maybe correct the budget for next time to check if it's better to take 285 now or if we can stick to 276. So the question would be why we have more fixed cost in the reality than we planned to have. Well, I think it's just because, as I said, I think yesterday I gave this example. It's always my only example I have, so I hope you will not ask for one more. If you have other examples, please share. Is that, for example, you know there is a machine that is breaking during the month, so you have to buy a new one. So you have to, to have more depreciation to consider during the period. And so this is why we have an extra amount of fixed cost compared to what we expected to have. But there is nothing much we can do about that, right? I think we could agree on the fact that maybe when it comes to direct material, direct labor, we can really change something. And so we spent more time analyzing them. When it comes to this one, it's not that I don't care, it's just that, there's, let's just be efficient, right? If there's nothing we can do about it, let's just check if we should need to change the budget for next time and move on, right? It's not useful for our company that we spend 2 hours, 3 hours analyzing something if there's nothing we can improve for next period to reduce the cost, right? So this is what I mean. I think we all have this. When we work, we know sometimes that people ask us to do things, and these things take a lot of time, and sometimes we say, wow, it's so useless what they asked me to do, I still have to do it because my boss asked me, but I don't see the added value. And so sometimes it's like this. If we have the chance to be able to choose for where we put some effort, well, this is not here, I guess. Okay. So this is it for the calculation. So let me just come back to one document that I like very much, which is in your slides, because it summarizes. This is important. This one is important for me in terms of explanation to give you. This one. This is a summary of the variances we discussed. Okay. So I think it's not too far away, so maybe you remember, but the first variance we calculated was 93,100. It was two days ago, I guess, or maybe even yesterday. And it was yesterday, so it should be in our minds. And so this was the total variance, right? And so then afterwards, we just split this variance, and we can see that we just get into more and more details, right? So firstly, we separate that into the flexible budget variance, okay, which is the budget for 10,000 units versus actual information for 10,000 units. And on the other hand, we have the sales volume variance, which is budgeted information for 12,000 versus budgeted information for 10,000. So we can see that for this one, we don't have anything under it, right? So we didn't spend time analyzing the details of it. Here we get a lot of things under it, right? So, and we can see that each time we have one more step, it means that we spent time together doing it. If you remember well, first thing we did, we just analyzed the selling price variance, the fact that we sell the product 125 instead of 120. And so we thought about what could be good explanation for this, right? We talked about discounts and so on. And then we talked more precisely about the direct material variance, direct labor variance. And so that we split into price and quantity variance. So they call it in efficiency, for me, quantity. Okay, so no big deal. And so that the level 3 is only, so the level 3 is only for these two ones, right? So we just discussed a few minutes ago these two ones, overhead manufacturing cost, fixed and variable. And so we've been explaining globally the 93,100. Okay, so we've been doing our job as management accountant to explain why we have such a variance. We have been doing, the first step has been to say, okay, boss. So firstly, we have 93, but finally, the real one is 29. The rest is, don't care. And from there, okay, we get positive variance for the selling price. That's good. And then we have to look after what we have in direct material, direct labor, because we have unfavorable variances. And so we can analyze, we can check this, we can list these possibilities. And so now it's time to go and interview the people in the purchase department, in the manufacturing department, in the human resources department, to check our assumptions, if it's good or bad. So we can see if some of those guys did a bad performance and why. So we can improve. Is it because we bought a lower quality raw material or something like this? Okay. And so on and so on. And also be critical with our job as budget people. And so change the budget maybe for next month with rolling forecasts. Okay. So this is what I wanted to say to you guys about this. I don't know if you have any question. Okay, so for the individual assignment, you also have a part about variance calculation and explanation. Okay, so there is a first part about the budgets, like we did for statistic case, and the second part is more like this one. Okay, so you have the two things to do. I will provide you with the individual assignment very soon. It's prepared already. So I will give that to the ladies program managers. Okay, so they can send it to you. The deadline is the same that from the group work, so we're gonna be soon able to check for the deadline. And so we got some extra slides here about blah blah, but if you allow me, I would prefer to go directly to the part 3 because I would like to have the time before the break to talk about it to you. So usually it's going to take 1 hour. So it means that maybe we're going to have a break a little bit later than usual. Please tell me if it's a problem for you, okay? Because I would like to be finished before the break, so we can get into breakout rooms and have 1 hour left after the break for me to get into each room to check about the project. Is that okay for everyone? Can I have at least one okay in the chat, just to feel to be sure that you understood, you heard everything? Okay, thank you very much. Okay, thank you. Sometimes it's so, when I'm in the room with you, you know, I have these moments also when I talk and I'm alone to talk and I can see your faces and I don't know if you okay or not, but here I don't even see your faces. Maybe, you know what we can do, just before 10, we can say bye-bye using all the videos, you know, for just when we are finished. That could be nice. Okay, so balance scorecard. So this is the part 3 of our seminar, which is more about, I wanted to develop that with you because it's not about calculations. There is no calculation here. There is no Excel file to implement examples or whatever. It's about forward thinking, okay? And so I wanted that to have that because I think you are master students, right? So I think when you go back to school with the CFVG, it's because you want to learn more, right? And usually you are in this moment of your career, you already have a few years of experience and you want to have this master, or maybe you have also within the company some opportunities to grow and become a manager or something like this. So I think it's also important for you to, you know, that we take some time to work on, you know, putting ourselves in the position of managers. Okay, so this is what we do with the balance scorecard. So let me explain why I chose this. So what is it already? Balance scorecard. Okay, so the image I take sometimes is that suppose you create a company. Okay, you create a company and you are the manager of that company. And so every Monday morning, you would like to come to your office and find on your desk a piece of paper with some indicators that shows to you if the things are going well or not. Okay, so the question is, what would be the information you would like to see on this paper? Okay, and so there is another thing that exists which is similar to that, which has been invented by French people, so that's why the name is French, so maybe you know that, tableau de bord. The English for this is dashboard. Okay, so I'd say that because I think some of you guys, I'm sure in your company, you have that kind of indicators to provide to your management already. So you know that on one form or another. So the balance scorecard is another form, okay, which is actually a good, I think I like the tool because it really helps you to think. Okay, so this is what you do, and you will have to build a balance scorecard for the company you would like to create or the activity you would like to create. But you will have to put yourself in the situation that you are the manager of this company. Okay, so what would be the indicators you would like to see on your desk on Monday morning? And you will be, of course, a group of managers because you are several people in the group. So what is a balanced scorecard? It's a document that translates the strategy of an organization into some measures, okay, that provides a framework to implement the strategy. So the idea is to say, I'm the manager, the strategy of my business that I'm going to open in is this. How can I find indicators to measure that my strategy that I implemented is efficient or not? Okay, this is what I would like to. What is important also and interesting with this balanced scorecard is also that we usually try to have a mix of financial indicators or financial measures and non-financial measures, okay, to evaluate the performance. So the performance is not only about financial performance, it's also about non-financial performance. So we have to find indicators which are various, right? Which are, you know, a bunch of indicators that are very different one from the other. The balanced scorecard was developed in the 90s, okay, by Kaplan and Norton. They are from Harvard. And so what I mean here is that it's a recent tool, right? It's only developed 30 years ago, okay? So, so it's a quite modern tool as well, which means also that this is a tool that people didn't think it was important before, okay? We were more concentrated on what we did earlier, budgets and everything. So these people, these researchers, these academics, they say traditional performance measurement that only focus on external accounting data is obsolete. And so that's why they call it the balanced scorecard, because they want to balance their approach to the financial perspective. So they want more than a financial perspective. So in a balanced scorecard, you should find 4 parts, okay? Financial part, customer part, internal business perspective part, and learning and growth part. So these are the 4, let's say, set of actions that you would like to find some indicators about when you launch a business. So I'm going to get into the details of each of the 4 parts, and then I will show you what the balanced scorecard can look like. Okay, so in the financial perspective, what we want is to answer to this question. What we must do to create sustainable economic value for the shareholders, okay? So it means that we have to think about actions that we can implement in your company to reach that goal. So that can be, you know, an indicator about profitability. So how I can manage to have that level of operating profit, how I can manage to have that level of cost of goods sold, how I can manage to have that level of cash also, because cash is an issue, especially in the COVID times. How can I manage to have this level of cash? So my job, what I want among the first objective is that I have a good level of cash always. So what can I implement in terms of actions to be able to do so, and what are the measures that I can use to reach this level? So also please keep in mind that usually, and especially in your group work, when you have to develop the indicators per category, so financial, for example, try to find indicators which are different one from the other. So here, this is what I did on purpose. There is profitability. So profitability is profit divided by sales. Okay, so it means that it's an indicator from the income statement. Return on capital employed is usually profit divided by assets. So it's a mixed indicator of how efficiently I use my assets. Cash management, so it's level of cash. So this is also another thing, okay? So this is what we should find in a financial perspective. In the customer's perspective, the focus is on the question we have here. Globally is our relationship to the customers, and how we can improve this relationship to create more business, more sales for us, more profitability of the customer account for us. Okay, so it's about customer retention, acquisition, satisfaction. So when we talk about customer retention, is what are the actions we can implement so to keep the customers. Okay, so if you're a phone company, for example, what are the actions you can propose to the people when the 1 year contract is finished, so you can keep them? So maybe you can make a discount for a new phone or something, that kind of thing. So actions you can do to retain an existing customer. What could be also the type of actions you could implement to acquire new customers? Okay, and also what kind of actions you can think about if you want to increase the satisfaction of your customer? Okay, how can you improve the service, how you can so maybe it leads you to have the customer who stays and maybe who develop more and more business with you. So it will have an impact, of course, on your level of sales. Okay, so that's for the customer's perspective. The actions you can implement to make the customer more happy and more active with the company. Okay, of course, there is an interaction between all of this, right? The profitability of an account will be linked to our capacity to retain the customer, to acquire the customer, to satisfy the customer. And of course, it will have an influence on the market share of the company, which is ultimately what we would like to develop, right? The third type of actions you can think about is internal business process perspective. Internal business process perspective. So here we are talking about logistics within. What is customer acquisition, Prof? Is when you have a new client, it's new client. Customer acquisition, when you acquire customers, that you're gonna convince someone to become your customer. Okay, so yeah. So on one side you have the retention. Okay, retention is about keeping an existing client, and acquisition is about try to have new clients. Okay, these two actions make sense if you want to develop your market share, right? So this is the two things you can do. Or you can work on your existing client to keep them and develop business with them, or you can try to find new clients from the outside. And then you have maybe to implement marketing actions and stuff like that. Okay, and of course, you have to make your client satisfied, right? If he's satisfied, usually it's a good sign that the client will buy you more and more stuff, right? It's usually how it works. Okay. So coming back to internal business perspective, what I was just saying is that it's about the processes. So it's about the logistics within the firm. So how we can make that efficient, okay? So the customers are satisfied, so it creates some business, okay? So to satisfy our stakeholders, what must be our levels for productivity, efficiency, and quality? Okay, so we have this question. Okay, so when you talk about business improvements, so we are talking about internal operation. Okay, so it's about improving the processes. Okay, so usually we say that you can find 3 types of processes: innovation, operation, and after-sale customer service. Okay, so in your balance scorecard, that could be like this. So it will depend on what you choose to have for the product. So let's say you decide. I don't want to steal anyone's idea, so I hope I don't. But let's say that you decide to open a coffee shop. Okay, so here the operation process would be how efficient it is for you to deliver the coffee to the person. So how is it prepared? What do you put with it? Is there someone who's serving the people on the table, or is it a takeaway and stuff like that? If there is anything that the people, what can you do if the customer is not happy with it, and in the after sales and so on? How in these COVID times, I don't know for you guys, but here we are still in Canada. It's even more and more complicated. They just announced that they close everything for Christmas time, so no restaurants, no shops, no nothing. Okay, so they say they take the opportunity of the Christmas holidays to say, okay, people are not working during this time, so let's put everybody home, and so that's it. So you see no one, you see no family, no nothing, and so you stay at home. So I guess we're gonna go on do what we do with my wife, which is that sometimes we make ourselves deliver the good restaurant, right? And so that would be about this. So how can you organize, you know, the delivering of the product, and you can make it efficient? Of course, it's usually outsourced, right? But for a restaurant, but this is the thing you can think about. How can you efficiently organize your business processes? Okay, so your processes are efficient. Okay, and so of course you understand that depending on the activity you're going to choose, it's going to be different things you're going to develop. Okay, so that's what's going to make your job original. Okay, and so when you choose something, a new business to launch, or you know, something like this, you have also to think about, can you easily find ideas about all those things or not? So last part number 4 of the balance scorecard is, what are the actions you can implement to increase let's say, the performance and the satisfaction of your employees? Okay, so this is about learning and growth. It's about your employees. Okay, so what are the actions you can implement to make your employees better workers? Okay, so of course we can think about you know, training for the staff to increase their competencies. We can think about technology infrastructure, meaning software processes. So people, like, for example, Zoom, so we can communicate with each other. Climate for action change, meaning that you have a sort of I don't know, you can have a newsletter that you send to the employees to say, this is the value of our company, this is what we would like to change, we need you, and so on, like that. And so the idea behind that is that you want your employees to be more and more efficient. Okay, and so globally the idea is to say, if you want your employees to be efficient, firstly they must be happy. Maybe not be naive, right? But they must be, you know, in a good mood when they work, and so they will stay. Firstly, so retention, and so if they stay a long time, of course, it means that they have more experience within the company, so they know better the company, so maybe they are more efficient. Okay, satisfaction also is the same, right? And so it can, of course, have an impact on their productivity. Okay, so you have to find objectives that could be interesting for these 4 things. Okay, so this is a balance scorecard, and this is what you have to prepare, sort of. This is what we should find in the appendix of the report, the group report you will have to do. Okay, so globally the report you will have to do will be to prepare this and to explain what is your company and to conclude, but the idea will be this. Okay, and so we can see that for each part, learning and growth, customer, financial, and internal business process, the way you're going to present it physically, you're going to have 4 columns: objective, measures, target, initiative. Okay, so what is the objective? I want my staff to know better the Zoom. Measure, I'm gonna implement some training session on Zoom. Target, I want, no, sorry, measure is what is the percentage of my employees who receive the training on Zoom. Okay, target, I would like 90% of my employees to have a Zoom training. Initiative, so it's I implemented a Zoom training. Okay, so each time you must try to find some different objectives, okay, for each of the category to let's say improve learning, growth, customer, financial, and business process. So this form is very important to respect: objectives, measure, targets, initiative. It has to be logical. In the group work, you will be asked to find 4 indicators like this: 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4, 4. So 16 on the whole, minimum. If you have more, you're welcome. Make it diversified, okay? It's not always about training, it can be about something else, and so on and so on. You have to find good ideas, and certainly good ideas according to the activity of your company. Okay, so that will be what will make your job original. I have more information for you, but it's not going to take long. We have page 79 for 86, so we are nearly finished. Firstly, one advice here, we can see that you can have this type of interaction that goes certainly from learning and growth to internal business process to customer to financial. So maybe one advice for me would be that you begin in your report with learning and growth, then internal business process, then customer, then financial. Okay, so that's the idea, because of course they can be interlinked, right? And here it is, right? Investment in staff development should maybe have an influence of the level of after-sales service. Okay, we improve our after-sales service, so that should lead to more customer satisfaction, and finally people will stay here. Okay, so we can see, so of course you will have to present 4 different parts, but let's keep in mind that of course these 4 different parts make a whole that is that is satisfactory for your company. Here it's what we call a strategy map. So it's not a balance scorecard, but it's usually the strategy which is behind the balance scorecard. So this one is extracted from the book I recommend. It's Cost Accounting. So if you want to know more, you can also read this chapter of the book. And I think the example they take for the balance scorecard is about chip manufacturing. You know, chips, the chips that you put in your computer. Okay, I think it's puce in French. So chip. Okay, I think it's the brain of the computer, if I'm not mistaken. So so this is a company that manufactured that, and so they show what kind of balance scorecard you could have here, or what the strategy map. Okay, so here we have maybe the 4 objectives, right? And so we have a color game with for each of the parts of the balance scorecard. Okay, and so we can see that it goes from the bottom to the top. Okay, to see what are the objectives we can do. So okay, we firstly in the learning and growth, we want to empower, so that gives you example also. Empower workforce. Sometimes it's a little bit theoretical, so I'm going to complete. Enhance information system capabilities, develop process skill, align employee and organization goals. And you can see that this, if we reach this objective, maybe it can help to improve the processes. And so if we improve the processes, we can improve the post-sale service, delivery dates, delivery time, manufacturing quality and productivity, manufacturing capability. So here I think it's good examples, because for the internal business process, because you know, you have diversified objectives here. Reduce delivery time, meet specific delivery dates. It's nearly the same, but let's say reduce delivery time, improve post-sale service, and so on. Okay, so that gives you also idea. And so when we have this, we can think about how we can increase the customer and market share satisfaction. And so some should ultimately lead to a better financial perspective. Let's say that these 2 ones are not developed very much, but these 2 ones are quite good examples. Okay. So yeah, so I think we're gonna find them again here in details. Okay, in 2 pages. Okay, so this strategy map is not something I ask you to do. It's just to give you the link between the balance scorecard and the strategy map. What you have to do is to think about these different objectives that you will put in your balance scorecard, and we're gonna see some examples here. Okay, so usually we say that when you build a balance scorecard, you have enough 20-25 measures. Okay, usually we say. So I said 4 indicators, 4 objectives, 4 parts. So I said minimum 16. So I'm nice. You can put it more if you. keep in mind that you need to find objectives that you can measure. Okay, sometimes there are some actions you cannot measure. Okay, there is something you say, ah, it could be nice to do this in my company. Okay, but sometimes it's not easy to measure. So if you cannot measure, you cannot check if you make progresses, right? So it's also important that, because you need to have objectives, measures, targets, initiatives, these 4 parts, you have to think if you can, have the 4 of them for one idea that you have. Okay, so do not forget, and that's also for real life, huh? Some in 2025 remember for 4 steps. No, it's for 4 objectives. No, 2025 measures for the 4 steps, yes, huh? On the whole, usually. So it means like around 5 measures for each of the 5 to 6 measure for each of the 4 steps. See, for example, here you can see we got 1, 2, 3, 4, 1, 2, 3, 4, 5, or something like this. And so I'm gonna try to make it bigger for you to see. So we got 2 pages, right? So remember the strategy map. We have the same colors, green, blue, and then we certainly will have, I remember, but we finish with orange, I guess. And so here you have an example of what you can have. So this is an example of what you could do for your job, for your balance scorecard you have to build. Okay, so just quickly go to the next page, because we miss. So what we have is this, right? Objectives, measures, initiatives, target performance. So please, in your group work, don't talk about actual performance, okay? Because you will put yourself in the situation of, you create a business, you would like to create a business, right? And so you are the management team, and okay, the business you want to do this and that, and so now you would like to create a balance scorecard for you to be able to, let's say, find some objectives to which are in line with your strategy. Okay, and so it's, what I mean is that the job you do is before you create the business. So because it's before you create the business, of course you don't know the actual performance. So again, it's not about calculations, it's about forward thinking. So you will need only to provide objectives, measures, initiatives, and what could be a target measure for this. Okay, so coming back from here, sorry, I begin with learning and growth perspective. So this is again the example of the chip manufacturing that you have in your book, the cost accounting book. Okay, sometimes the examples they give are a little bit too general, too vague. So let's see what we have. I'm not gonna get into all the details, but so this is the example I took. We want to develop process skill. The measure is the percentage of employees trained in the process and quality management. So the objective measure initiative. So the initiative is employee training program, and we want 90% for employees to be trained to that program. Okay. Enhance information system capabilities. Okay, so this is another objective. So percentage of manufacturing processes with real-time feedback. Okay, so that's another way. We want to have a good information system for our employees. So what is the initiative? Improve the online and offline data gathering, and 80%. So I don't know what 80% must be the percentage. Percentage of manufacturing process will feedback, and so on. Let's take one example in the internal business perspective. Okay, this one is nice. Reduce delivery time to customers. That would be our objective. Okay, so the measure is order delivery time. Okay, And the initiative we're going to take would be to re-engineer the delivery process. Maybe it's a little bit vague, right? Because if you can be more pragmatic, it could be even better. And so 30 days, okay? Sorry, the other way around. For the customer's perspective, I think for this one, my advice is really to think about retention, acquisition, satisfaction, okay? And so that gives you already some good clues about how you can lead to a good customer perspective. Okay, so here, for example, it's too vague for me. I remember this one. Increase customer satisfaction, it's too vague. For example, if it's about number of new customers and customer satisfaction rating, I would separate that into two things. Increase the number of customer acquisition, increase the number of new customers, okay? So the measure would be how many new customers you have, and the initiative would be what you do to have those new customers. So let's say you have this coffee shop, for example. I don't know, I'm going to take a silly example, but you would like to, let's say, increase the number of new customers. So you have been explaining that your coffee shop is in this area of the city, which is just besides the building where young people, young professionals are working. So maybe you're going to implement actions, I don't know, to distribute flyers or to create a Facebook page or whatever, that can be interesting to attract new customer. Or you're going to maybe give them a discount for the first coffee, or you're going to offer them a cupcake for the first coffee, that kind of initiatives that can be useful for you to be able to increase customer satisfaction. So this is what I say that I would like you guys to be pragmatic. And again, it has to be adapted to the business you do. Okay, so again, your choice of a business is important. I will tell you the same thing that people told me when I do some research, academic research, when I did my PhD, when I began my PhD, because I did my PhD quite late in my career. Like you, I've been back to school in the middle of my career to do my PhD. And so people were saying to me, the topic of your thesis, of your PhD, it's something you're gonna slip with during four years. So you have to take one topic which is something you're interested in, because during the bad days, it's gonna be hard for you to get to work on this. So you have to find something that, okay, maybe even when you're in the bad mood, you still want to work on it. Same thing with your project. Think about something you like. Hopefully try to find something all the members of the group like, okay? So you have fun working on it. Certainly you will split the job, right? The perspective with the different people. I think you have five people per group, so you have 4 objectives, and you have also the introduction to do and the conclusion to do. So it can be like this, okay? And then also the business you will choose is something you can easily think about, objectives and initiatives you can have. So yeah, I'll let you choose. I've been doing this for 5 to 6 years, I guess. So I don't want to give you too many examples, because I don't want to influence you on the choice, and I don't want you to cut an idea. So I hope that with my coffee example, I didn't steal someone's idea, but that's it. And so for the financial perspective, so we can see here, grow the operating income. Okay, so maybe it's also a little bit, vague. Here, I would say maybe, okay, how we can improve the cost of goods sold, how we can improve the level of sales, how we can improve the level of the working capital, how we can improve the level of the productivity through the return on capital employed, how we can improve the level of cash, and the measure will be the level of cash, or the percentage of the number of days we are in a negative cash situation in the budget, or the number of months. You can really find a lot of things to say about this. So please, what will make the job qualitative, good job, will be if you have a variety of indicators. Okay, so again, for financial perspective, maybe in one indicator which is linked to profitability and income statement, another one which is about, you know, the level of the cash, another one which is about, again, the level of the return, and so on. And if you have other ideas. Same thing for the customer perspective, maybe one objective about customer acquisition, retention, satisfaction, and so on and so on. And please, and maybe you will find some good examples according to the job to the company you're choosing. Okay. Okay. So yeah. So these two slides here were also to give you some example. Okay, which are linked to the strategy map. I don't ask for the strategy map. Okay. And I guess I also found in another book some frequently cited balance scorecard measures. So maybe that can help you. Let's go from the bottom to the top. Learning and growth perspective, employee measure, employee education and skill levels, employee satisfaction ratings. So maybe you can think about the survey to give to your employee to say if they are satisfied or not. Employee turnover rates, of course, if you have a lot of turnover in your employees, it may say something about, you know, so one of the objectives could be to keep the more employees you can, and so you can you measure that with the turnover rate and so on. For the internal business perspective, so you have some proposition for the three processes I was talking about: innovation, operation, and post-sale. So innovation, operation, for example, the number of defects rates, time to deliver, percentage on time. So these are the measures, huh? These are not the objectives. So you have to find the objective that goes with it. But that could be a good idea for, the good ideas how to measure the objective you would like to implement. Customer's perspective, when I say market share, not market share, I don't like it because it's too vague. Customer satisfaction, customer's retention percentage, number of customer complaints, all those things are good ideas to measure, okay? Financial perspective, operating income, gross margin percentage, revenue growth, cost reduction in key areas, and so return on investment, and so level of the working capital, number of days of receivables, whatever. Okay. So just to conclude with the balance scorecard, on a theoretical point of view, I think I can hear a mic, so mute all, Bing. Sorry, I muted you. So globally, to recap, what are the benefits of a balance scorecard? Well, firstly, if you understand, the balance scorecard is a tool for the top management to create a link between the strategy you have in mind for your company and what's going to happen. How you can check through the balance scorecard that the strategy you have in mind is going well. Firstly, by having the 4 parts: financial, customer, internal business, and learning and growth, and so on. So certainly this balance scorecard, which is certainly also a communication tool between top management and employees of the firm, firstly, it must be in line with the strategy, okay? So the fact that there is a balance scorecard that exists facilitates communication, and for the top management makes maybe things easier to explain to all the employees at all levels of the organization, okay? It can also be sort of a motto, right, about good things to do for the, especially when you come things, I don't know, about customer satisfaction, okay? Each time the customer arrives, you say hello, you say this, you say that, you give this, you say have a nice day, and so on and so on. So you develop good best practices, okay? Also, another benefit of the balance scorecard is that it transforms something which is a little bit theoretical, which is the mission statement and the strategy, okay, an idea, into something more hands-on, more practical, okay, marching orders for the organization on a daily basis. And also it can, since we know the objectives and maybe also how to measure them, that can help executives to really implement the objectives of the company. Just for your information, this is The source is from the book again. I didn't quote it, but it's from the book, the cost accounting book. To date, some form of a balanced scorecard is used by nearly 60% of Fortune 500 companies. I think that also means that balanced scorecards, something you will find more in sophisticated big companies. If you are talking about small business, maybe, you know, you don't need that, right? If you work alone, if you work alone at home, maybe you need, but maybe you need less sophisticated tool, that's for sure, okay? Because, but still, we don't care about that when it comes to your group work, because, you know, if you just take one shop that you open doing something, you know, it's okay with me, because I want that you have pleasure to work with this project, to work together, because it's still the beginning of the MEBF. So I guess you guys, you know each other a little bit now, but maybe, you know, with that kind of group works, you get to know each other better again. And also, you know, it's quite new for you to put yourself in the position of the top management, okay? Because this is what I really would like to do. It's not about calculations here, it's about being you on the other side of the fence, right? So you are now the one who's receiving the information. So you develop the tool that you would like to receive information from. So take a practical example, even if we know that ultimately, of course, balanced scorecard will be mostly developed in big companies, which makes sense, huh? Because this is a balanced scorecard. Certainly, you need a sophisticated company to need a balanced scorecard. So what are the usually criticism and pitfalls of the balanced scorecard? Well, firstly, we can say that balanced scorecard cannot be clear if the strategy of the firm is not clear. I've got two images for this. I love movies. And I think you cannot have a good movie if you have a bad scenario, okay? So even if you have all the budget in the world to make some special effects, if you have a poor scenario, the movie will not be great. Same thing here. The balanced scorecard cannot be great if the strategy of your firm is not clear in your mind, okay? And we say that in research, we say that. Also, we say garbage in, garbage out. So it's about projects we do in quantitative research. If the database you use at the first place is not clean or not well thought about, then you put that into your software, statistical software. What's gonna, at the end, the result you will have will not be clean, because you didn't think well about what could be the good research question and what could be the good data to do. It's about a strategy. Same thing here for the balanced scorecard, of course. Another pitfall would be too much focus on lagging measures. Okay, so sometimes measures you cannot, some things you cannot measure. Okay, so do not be hard-headed. What is strategic objection? I don't know, where is it? Strategic objection. Where is it? Strategic objection. No, I think it's not objection. It's strategic objectives. Thank you. That's a mistake. Strategic objective. Okay, so here it's objective, not objections. Okay, so okay, so if you cannot measure things, maybe it's not a good objective to pursue. Okay, so sometimes you can have good ideas about the objectives you want to do, but if you cannot measure them, then it's useless, because but you can be creative, right? In the measures you can find. So another pitfall, use of generic metrics. So don't just copy metrics from another firm. So it's not specifically for your group work that I say that, but it's more like if you implement a balanced scorecard in a company, okay, it has to be adapted to your situation, okay? But then it links to your group work, because I think you really have to find a business you would like to develop, I mean, to think about. And then, I mean, what will make your work valuable and interesting is if you can show me that you've been thinking about one activity and you understood well the balanced scorecard, so you've been implementing objectives which are nice and related to your company, to its activity, and so on. And same for the objectives and targets. Okay, so don't copy paste something if it's not adapted to your situation. And of course, it's not going to happen in the group work, but in real life, some self-serving managers, as we say, managers whose goal is to achieve a desired result in order to obtain a bonus or a self-reward. So maybe, you know, the objectives and the targets will be linked to what they know they are good at, or that's easy for them to reach. Okay, so of course, it's not good to have that in the thing. So just to conclude, okay, again, so this document you have to do. And what I wanted to add, just, you know, about what could be a good job is, you know, again, like in the, maybe I'm obsessed with this, but I'm obsessed with coherence. So I really would like that there is coherence between objectives, measured targets, and initiatives. Can you explain again about lagging measures? Okay, lagging measures is just that so usually when we talk about lagging measures, it's but the measures we are not able to obtain, right? So for these ones, okay, so if we cannot obtain these measures, it's not so easy for you to you know, to implement, okay? So if I'm not mistaken, this is what I want to say here, because we talked about lagging, so that creates a doubt for me. So let me Google lagging again. Because that's true that, yeah, it says late measures. So yeah, when I say late, but I translate that into lagging, like that the measures we don't have, but it's not that we don't have them, it's more that they are late. Okay, that's true. Yeah, so okay, so sorry, I'm not sharing anything here. So globally, let's say that all the measures comes late or they are not here. So what I mean is that, you know, we should not, we should focus on what we can have in terms of information. This is how I can put it. We should focus on what we can obtain in terms of information, in terms of measures, and you know, be wise enough to, let's say, accept the idea that some things cannot be measured. Okay, so yeah, I was just concluding. Okay, so sir, outside topic, could you help to explain something about earning warning signal, such as relation between sales and accounts receivable, net income, and operating cash flow? Something about earning warning signal, such as relation between sales and accounts receivable, net income, and operating cash flow. Okay, so for this one, I don't know what earning warning signal is precisely, but what I understand from the rest is relation between sales and accounts receivable, net income, and operating cash flow. Okay, so let me take an example. Okay, so let me take my Blackboard document. I don't know if I understand well with the question, but I'm gonna try something still quickly so we can have the break afterwards. Blackboard. Okay, so you know when you have sales, okay, so you say we have 100 of sales, right? So you sell something, okay, and so you have accounts receivable for 100, okay. So at that moment, you know that all the sales will be in your income statement, right? Because, sorry. Okay, let's put it in the right order. Okay, so when you sell, you have this, right? And then when you receive the cash, this is what's going to happen, right? And maybe sometimes we're going to have maybe only 80 here, okay? 80 is going to be received. So it means that we have, in the accounts receivable, we have 20 left, right? Because we have 100 and we receive 20, okay? So firstly, what we can say is that you have to distinguish the moment when you have the sales which are made. Okay, so this is a moment when you have a positive influence on your income statement. Okay, so that is your earnings. And the cash is, of course, the moment when you have the impact on the operating cash flow. Okay, so we really have to remember that in the company, we have these three documents, which are the income statement, the balance sheet, and the balance sheet and the cash flow statement. Okay, so if we do this in the account receivable at the end of the period, we have 20. Okay, so this simple operation shows how the different things are articulated. I'm not sure. I think this is what you want to talk about. So this is what I would like to say. Okay. There's one more. The first moment is when you sell. When you sell, this is the moment you're gonna increase your earnings. Okay, and you can see that it's not the moment you receive the payment. Okay, so you have the wealth creation, which is at the moment when you have the sales which is done, which is also usually when you have the transfer of property, okay? Because you give physically the product to your client. So the client becomes the owner of the product, even if it didn't pay it, okay? Because he owns the thing, and accounts receivable represent a promise to pay by the customer, okay? So this is when you increase your earnings. So let's say that this first operation arrive in December and the other one arrive in January, it means that your operation will have a positive impact on your earnings, but no impact on your cash yet. Okay, so it's only when you receive the payment that the operating cash flow will be influenced, right, by the level of your sales. Okay, and the difference between the two will be finally considered in the balance sheet. So usually what we have to look after is how efficiently we transfer the sales to operating cash flow, right? Is it long or not? So that's why we usually are going to measure a number of days of receivables, for example, or stuff like that. And we're going to you're going to also look at we're gonna look in details into what we have in the accounts receivable. Is it money which is supposed to be paid for a long time, or is it only coming from last month, and so on? So we have to look after this. Nowadays with the COVID and everything, I don't know if you have this problem in Vietnam, because I know that for you guys, the life is nearly normal now, good for you. But here we have a lot of companies in Canada, but because I live in Quebec now, so of course I hear the news here, but certainly same thing in Europe and in many places in the world, that companies have been able to, to, let's say, face the COVID situation for a few months, because the banks have been helping a little bit and so on. But now there are a lot of bankruptcies that can come now, because the people are missing cash, maybe because they have been selling, but they did not receive the cash because nobody's having cash, right? So of course the transformation of earnings into cash is very problematic. And even maybe this year, it's not been a lot of sales because of the COVID. So we miss some sales, so we miss all sorts of cash. Okay, and bankruptcies are usually linked to the level of cash of companies. So I don't know if it's answer to your question. such as relation between sales and accounts receivable, net income, and operating cash flow. Yeah, okay. Well, I hope it does. Okay. So just to conclude, and then we have the break. So I would like you guys to have coherence, right, between the objectives, measure, targets, initiatives. Okay, so that's good. It's going to be coherent. If you decide to have this objective, you have to find a nice way to measure it, a pragmatic target, and the initiative that goes with it. So maybe we can just finish with the going to the rules of the game for the group work. Okay, so in groups, you must create a balanced scorecard for a new project that you intend to develop using data that you will estimate on the theoretical structure of the balanced scorecard presented in class. Okay, so I hope now that it makes more sense now. You can choose any activity or any project. Okay, it doesn't mean to be a real project. I don't care, because what I want is coherence. So you can create everything out of the blue. I know it's not easy, but usually you guys do, huh? And usually people will try to take an activity that they like, that would like to do, or maybe a project they have to create a company in the future or something like this. Okay, so please notice that choosing an activity project that you know or for which it's easy to gather or imagine information is highly recommended. Okay, so don't take something too much complicated, and when you begin to think about objectives, you have no ideas. Okay, so this new activity or project, for example, can be the launching of a new brand for an existing company. Okay, so each time it's like you create something new. Okay, it's like a new company or a new business unit or a new project. Okay, so that's why you need to do the balanced scorecard. What I mean also is that, so you're not in, so it's easier to create the objectives because it's not comparing to the existing company already. Okay, so maybe it's better to find something which is new. You create something, a new brand, you open a new shop, you open a new subsidiary in a new location for an existing group. Okay. Work to do, prepare a written report for 20 pages. I don't care the number of pages. Okay, it's just indicative, explaining the different indicator you choose for the balance scorecard of a selective company. So it counts for 50% of your financial control mark. The other 50% is individual assignment. So again, there is no final exam in this course. Okay. Deadline for both the assignments is the 4th of February. So I guess it's just before TET, because I remember that Kiolin and Tram, they told me that TET is quite early this year. Okay, so we want you guys to be finished with my courses before TET, because I guess with the COVID situation, maybe you're gonna have a lot of courses coming at the same time. So you will send them the report to your program manager, Kiolin or Tram. Okay, so this is an indicative content for the written report. So of course, name of your project, the name of the numbers of the group, please do not forget this. I shouldn't have to say that, but I say that because every year there's one group that forgets. So firstly, the first part is you present your project. Okay, you will explain what is your project, what is your strategy, the marketing and financial. So you present. Okay, you sell me your project. So that's the first part. And so I think take the time to explain well what your project is about, because I think the balanced scorecard will be easy to understand if the project is well explained here. Then you present the balanced scorecard with the 4 parts. Okay, maybe you should begin with learning and growth, and then the other ones. For each perspective, you must show at least 4 indicators and detailing for each indicator: objective, measure, target, initiatives. Okay, so let's be clear here. You will put in the appendix the balanced scorecard in the synthesized version. Okay, sort of something like this, or maybe more something like this. Okay, this one. Okay, something like this. Okay, because think about the reader, me. I would like to see the balanced scorecard itself. Okay, so it's important. So you put it in the appendix. Okay, and then in the corpus of your the detail, in the body of your literature and the body of your work, you explain in details for each of the 4 parts. Okay, for this thing, we've been thinking that the strategy for customer is good for this. So we decided to have 4 indicators, 4 objectives. So the first objective is this, no. And so you explain with words details of what is in the appendix of the balance scorecard to show to me that you understood. Okay. Do not forget that you don't need to, okay, so for the measures or targets, you can give just an indication because you have not created your company yet, so you don't have actual performance. And there is a conclusion. So do not forget conclusion because you have marks for the conclusion. Okay. Sometimes some people, they forget to do the conclusion, maybe because you have 4 parts and maybe some years we have 4 people per group. So that's why this year, I think you have 5 people per group. So do not forget to, to have a nice presentation of the project, to have a nice conclusion of the project, and in the body of your work, 4 parts for the balance scorecard. Okay, because you will have marks for each of these, let's say, 6 moments of your work. Okay, so I think this is it for me. So I don't know if you have any question before I let you have a break. Maybe we can go directly in the rooms, taking the break and getting in the rooms before. No question? Okay, so my guess is I'm gonna put you guys into the breakout rooms now. So please do not forget to put the number of your group in your name. I see 4 people at least. Yeah, Kyolin, of course not, but the other ones. So please put the number of your group in your name. So the number of group has been provided by the assistant. It's not the same number of group than for the investment decision, right? Okay. So I'm gonna put you in the groups so you can have your break and maybe, start to talk with your colleagues. And from 9 to 10, I will come at least once in each of the groups to, just like I did for the investment decision project, just check with you what is the project you chose. Okay, so let's say that I will not have more than 5 minutes to give you guys because we have 8 groups and 1 hour. Okay, so it's 40 minutes. So just the idea is just tell me if you have an idea about the project and what it is, just to check with you if it's okay, if I think it's feasible, and maybe give you some advice about it. And then we will be done. We'll come back to the main room. It's finished. Okay, no presentation here. Huh? It's the written report to do. Okay for everyone? Okay, so I take this as a yes. And now I'm gonna assign people to the different rooms. Okay. Group 2. I have only 3 people in the group 2 for the moment. Group 3. I have only 2 people for the moment, but maybe it's just the way you name your name. Group 4, okay. So group 5, okay. Group 6. You have, yeah, okay. So it's maybe group of 4 or 5 people. So that's 7, 7, 7, 7, 7, okay. And 8, 8, 8, 8, 8, 8. Okay, now I got some people with, okay, Mr. Builem, now Liem is now in group 1 as well. Group 2, we got Miss NUN 89. Group 2, okay. It's just the way you wrote your name, which is a bit different, so no problem. Let me just, okay, I still have a few people with no groups. Okay, and now group 8. Okay, so I think I have 2 people. So I'm gonna open the breakout rooms now. So you can enjoy your break, and I will come back in, in a few minutes to see you. And that's it. Okay, so enjoy your break and see you later. So we still have 2 students, Mr. or Mrs. Tao Trin, and here Enya Nguyen, for which I don't have the group number. So you have to change your name and put your group number in your name. Okay, I'm gonna get myself a tea. Okay, and I'm gonna think maybe stop recording, because I don't want in the video that people see the discussion between each of the groups. So I stop recording now.